you'd be amazed at how many past homeowners can't tell you who the broker was, and which leads me into, we just released our CRM leader, which is our CRM system. You got to stay in contact with your past customers. They might today want cash out to do home improvements. In a few years, as their kids get older, you could monitor that. And when college time comes, you could reach out to them and see if they want to do another refinance.
Where one loan officer might say, oh, you're in the best spot, there's nothing we can do for you. You can be the one that says, yeah, we can actually go ahead, take advantage of ReFiNow. They want to be able to help borrowers out. That's why they invented this program. No cost, no limit. I don't got to worry about that.
Yeah, I mean, a lot of servicers do have a limit. Actually, I think there is a small cost, Brennan, on it, but it is unlimited with us. Some lenders have, only let you do it once, but with us, it's unlimited, which is nice.
Hello, hello. Welcome everyone to our webinar today. I'm so excited. We have a wonderful presentation for you guys today, maximizing refinance opportunities with two of the absolute best at our company. Give everyone just a couple minutes here to get in. And if you see some faces on the screen with me, we have Andrew Taylor here, who I'll introduce shortly. He's our SVP of Wholesale Lending Sales. And we also have the famous Brennen Moloney, our underwriting team lead here, making this big engine run. So we'll give you guys just a couple more minutes here, a couple more seconds, get everyone on. While everyone's getting in, if everyone could just drop in the chat where you're from. We love to see the imprint that we have nationwide. So give us a message, let us know where you're from. And I'm originally from Michigan, but I am in Dallas, Texas now. So Mortgage World has taken me all over the country. Oh, awesome. Looks like we have a Seattle, Washington in here, Tucson, Arizona. I'm going to come visit there soon. Houston. Okay. Thank you guys so much for putting that in the chat. Feel free to keep sending them if you'd like to. All right, so in today's session, let's go over the agenda real fast here. I'm going to do a formal introduction of our speakers in just a couple moments. I'm also going to go over a couple things about A&D mortgage. We're going to talk about the current mortgage landscape and some really exciting key indicators for us. We've been through a lot in the mortgage industry, but things are looking up, so we're going to go over that today. We're going to talk a little bit about refinancing since we're getting back into a refi world and who can benefit from refinancing right now. We're going to talk about some of the solutions that we have for refis here at A&D, and we're going to also go through a refinance manual for brokers. After that, Brennan's going to lead us through some scenarios and getting down to details everyone wants to know. And then last but certainly not least, we'll do a QA session and our wrap up. Now, as normal, just want to go through a couple housekeeping items and etiquette. Please type questions into the Q&A box. We love to answer the questions, but we need them in the Q&A box. So feel free to type all of your questions in there. We will go through them at the end of the session. And aside from that, as you can tell, your video and phones have been muted, but we love to connect with you guys through the chat. So if you want to send us any messages, tell us any nice things, make us laugh, we appreciate any and all comments in the chat box, so please talk to us. And I do see here, Siva, you said that you have to leave early. Thanks for letting us know. We will send out a recording of this presentation within 48 hours of the close of the meeting. So typically we usually send it within maybe 24 or so, but it'll be about 24 to 48 today. So not to worry, you will get the recording of it. Okay, so with that being said, as you know, A&D Mortgage, we are a nationwide lender. We are #1 officially verified non-QM lender. Brennan, Andrew, how does that make you feel? We're #1. It's a good
Yeah,
thing.
according to Scotsman's Guide, everybody claims they're the #1, but Scotsman's Guide claims, they actually verified that we are.
That feels good. It makes me feel proud. I
Yeah.
love that for us. And
But
in
let's not
addition,
forget, we're pretty good at A-paper too, because or not A-paper, I shouldn't say that, that's old school, but conventional paper as well. So that's what we're going to talk about today. But we are
that's
very good at
right.
non-QM.
That's right. I love that. Yes, we are going to talk about that today. So, and then the other award too, guys, that we have to mention is we just got the 2024 Originator Choice Awards from the National Mortgage Professional Magazine, which is pretty awesome. We love all these awards that we get. And aside from that, if you don't know, we actually have more than 6,000 partnering broker companies nationwide. And it's in the high 6,000s. So hopefully pretty soon here I'll be getting on saying we're in the sevens. And aside from that, we're almost 20 years in the mortgage industry, operating now in 46 states nationwide. And the thing that I think really sets us apart is that we're responding to our requests within 30 minutes. So that's from our account executives, from our broker support team, from underwriting. I mean, we really have a rock star team here. So I'm very, very proud of that. Now, just a couple more things about us here at A&D. Obviously, I told you guys we do have 20 years in business, but I think what really sets us apart is our sister company and the relationship that we have with Imperial Fund. We are actually one of only 5 lenders that securitize. And so that's a really, really cool feature that allows us to have, you know, a ton of products, constantly growing, introducing new niche programs, and that has led to a lot of the success that we have today. So looking forward to adding more for you guys. Now, one last thing here I wanted to go over was our footprint. So as you know, we are a full service direct lender, and we've been doing conventional and non-QM loans since 2005. And I just wanted to point out that we are licensed in all these states, as you can see on the map, but that there's a couple states here where the license is not required in those 40 states for business loans. So just some friendly reminders about our licensure. Thank you for that one. Now the good stuff. Oh, excited for this. Okay, so we have been through a lot. But this is the 30-year refinance rates by state. As of November 14th, 2024, you can see that the rate averages for refinance loans with at least 20% equity and a credit score of 680 to 39. The states with the cheapest 30-year rates are on the map. This includes New York, California, Delaware, Arizona, Florida, Louisiana, and Washington. And you can see here in dark blue that those rates are less than 7%. So we are finally headed back to our refi world, which is really, really good news. We're happy to see you guys kind of resubmitting or refinancing the loans that we've previously closed, and can't wait to see those coming through. Okay, we also have some awesome predictions and forecasts from the MBA. So the Mortgage Bankers Association is projecting that the 30-year fixed rate mortgage average will be 6.3% in the fourth quarter of 2024. And according to the economists, they're actually anticipating rates are going to continue trending downward in the next year, averaging 6.2 and 6% respectively in the first and second quarter of 2025. So guys, that's great news for us, great news for our business, just in general. All right, so without further ado, Andrew, I'm super excited to bring you on here. He is indeed our SVP of Wholesale Lending, like I mentioned earlier, one of the best sales leaders I've ever worked with. I'm so excited to introduce him. And then later on in just a couple minutes, Brennan, our underwriting team lead, will take over. So Andrew, do you want to tell us a little bit more about refinancing?
Yeah, thanks, Bridget. Well, basically, I mean, we're just going to start very simple here. I mean, what is a refinance? It's basically paying off your current mortgage and you're getting a new one, right? And, you know, you can refinance obviously with your existing lender, or you can go find a new one. You can shop around. And typically, you know, people are going to refinance to do what? The main reason is to lower their interest rate. When rates come down, we get in these refi booms. Sometimes it's adjust their mortgage term or a combination. Sometimes people can, you know, knock term off, you know, go from a 30 to a 20 with the lower rate and keep the same payment, so they can, adjust the mortgage term. They can, also obviously access their equity, cash out. Maybe there's you need money for college, home improvements, maybe there's an unfortunate divorce buyout, but for all those reasons, you can access your equity. And then, sometimes, more sophisticated borrowers sometimes, or larger buyers might take out, or when rates are high even, will take out adjustable rates, right? And, either they're going to adjust, or rates finally come down and they want to get out of that arm, and so they'll want to refinance. All right, so what are the key types? You've got rate and term, refinancing. It's really the most common, and you're either low, like I mentioned earlier, you're lowering your interest rate, or you're changing the loan term without changing the loan amount. You're just refinancing what you have. Talked about cash out, obviously taking out equity or taking cash out of your property, where you take out a larger mortgage than what you own on the property, and you get cash at the closing table. And then something I'd never heard of, this was a new term to me, and I've been in the business over 30 years, but a cash-in refinancing, which is actually where maybe you got a bonus or had some inheritance money and you pay down your mortgage to, lower your loan to value ratio, which might help you get a lower rate because the LLPAs could be lower, or maybe you want to reduce the term, or maybe get rid of MI, et cetera, et cetera. So cash in is where you pay down your balance. Now, one thing I just want to add is that we do securitize and service our agency paper. And as a servicer, we do offer recasting, which is actually really a free refinance, where if someone wants to pay down their balance, they don't get a new rate, but they can change their term. So if you lower the balance in the term, it's not the term, it's the balance, it will re-amortize the mortgage and it'll actually lower their mortgage payments. So that's a nice feature that we offer at A&D, as being a securitizer and a servicer. And then there's the streamline refinancing. FHA has a neat program where you don't have to check income, you don't have to get an appraisal, you can roll in your closing costs, and that's a streamline refinance. Less paperwork as well. And then VA's program, it's a streamline, but it's known as an URL in the industry. So, who could benefit right now? I mean, obviously, like I mentioned, there's people that have arms with rates coming down, and, we got teased a little bit with a drop, and they've come back up. But, like Bridget mentioned, the MBA is forecasting in first 2 quarters of 2025 for rates to come down. People might be able to get out of their arms at that point. Also real estate investors. I mean, there's a lot of people that have taken out, investor loans. It's amazing how many people actually own investor properties these days. And, obviously they can increase their cash flow by refinancing, lowering their interest rates. And then obviously there's always the long-term home buyers, right? They want to lower their payments, maybe lower their term. 20 years, but they go back to a 30-year because they want to lower their payment and increase their cash flow as well. So all sorts of reasons. All right, so within the refinance spectrum, we kind of, couple little, I don't want to call them niches, but just different products. So, there's, and I just wanted to, point these out they're mainly affordability products. You've got Fannie Mae ReFiNow, Freddie's equivalent program, the Refi Possible. And then, as I mentioned, you have the FHA Streamline Refinance.
Wait, Andrew, I have to ask, what's your favorite of all the refis? I'm getting excited.
What'd you say, Bridget?
I said, what's your favorite of all the refis? What's your favorite one to do?
Like either lowering term or lowering the rate, obviously, right? I mean, everybody's goal typically is they want to, pay off their house one day, right? And not have a house payment. So
that's it. I love it. Thank you so much.
Yeah, so you've got the Fannie Mae ReFiNow and Freddie Mac Possible. And these are really, for low to moderate income borrowers, where the minimum FICO is 620, they can actually refi up to 97% CLTV. And the big plus, obviously, is a DTI up to 65. And obviously, these loans have to be Fannie or Freddie owned. So if you're doing a Fannie Mae by now, Fannie would do the same on the Freddie Mac refi possible. But the big deal is the DTI up to 65. You do have to be, have 12 months seasoning in that property. You can only do one unit primary residence. And as I mentioned, the loan has to be owned by either Fannie or Freddie. But the big deal is there's reduced documentation requirements. Typically, you run it through the AUS systems, either LPA, which is Freddie's system, or Fannie's DU, and it only asks for 1 year of W-2s, current pay stubs, or tax returns. Another plus is you get a $500 credit if you don't get an appraisal waiver and you actually order an appraisal that can go back to the borrower or can pay for that appraisal as a credit. But like I said, it's an affordability product. It's income at or below 100% of the area median income. You might know that as the AMI. And basically the program's the same for Fannie or Freddie, except that really the only two differences are, Fannie Mae ReFiNow is for individuals, revocable and land trusts, and the Freddie Mac Refi Possible is only for individuals. You can't do the trusts or the revocable trusts. So, if you want to look up the AMI, you'd be surprised at what they are. And in your areas, you probably should know these where you live, because obviously there's other affordability purchase products as well. And these are the lookup tools that these links will be active when we send out the presentation to you guys. But both Fannie and Freddie also have them on their website, so you can go see what the AMI or area median income is for your area. FHA Streamline, we mentioned, that it's a very simple program. In minimum FICO 640, you have to have an FHA loan to do an FHA Streamline. There's no income verification, no appraisal documentation. You don't have to calculate, therefore, a DTI on them, so no one cares about the DTI. But the big deal is that you're lowering the payment, and that's what, FHA, so that you're permanently lowered your monthly payments. So, in order to do an FHA Streamline, you've got to at least have made 6 payments on that loan, on that current FHA loan. I mentioned, the reduced paperwork. You don't have to get all the income documentation and asset documentation, simple eligibility requirements, and it's eligible for single family, 2 to 4 units, PUD, condos, and then modular homes as well. So, to support your clients, in terms of being a good originator, you really want to be a consultant, right? You want to understand your client's goals. Are they going to stay in the house? Do they want to, retire soon? Do they want to do home improvements? Do they want to pay for college one day? These are the things that the questions you need to ask, when you're talking to your clients about refinancing. Then you want to make a financial assessment and see whether it's worth it for them, right? And I'll get into that in the next slide. Then you want to obviously tell them about all these different options they have to do. If they're not going to be in the property, maybe you refinance them into a lower ARM. If they're going to sell the property in a few years and pay less interest by taking a lower rate into an ARM at that time. Obviously you want to help them prepare for the application, get them educated, let them know the documentation that's going to be required. And then you want to shop. I mean, A&D is one of a lot of lenders, and hey, we want all your business and we have competitive rates and we know we're pretty good, but you've got to, do what's best for your customers and shop their loans around. Obviously there's the loan process, and in closing, you want to explain the entire process to them. And the big deal is post refinancing support, right? Because, hey, I can say this, I've been in the business a long time. A lot of people do a bad job staying connected to their customers. So, you'd be amazed at how many past homeowners can't tell you who the broker was. And which leads me into, we just released our CRM leader, which is our CRM system where you can market and track your previous customers and market to them at different milestones, whether birthdays, anniversary, a rate alert, if rates go down. And, well, I'm sure there'll be another webinar on that, but I just want to throw that out there, is that you got to stay in contact with your past customers. They might today want, cash out to do home improvements. And then, in a few years, as their kids get older, you could monitor that. And when college time comes, you could reach out to them and see if they want to do another refinance, if rates are low, if they need the equity, to maybe send their kids to college. You never know. So, it's all part of understanding your client's goals and making that financial assessment. And, you want to have a long-term strategy, which is, hey, I want to keep in touch with them. I want to help them along the way when they might need cash or when it's a good time to refinance. And, you stay in touch and you help people. People are busy. They don't have time to pay attention to this, and this isn't their, field of expertise. It's yours. So, you got to nudge people sometimes. So I would advise everybody to look, take a holistic, big picture approach with the customer and think long term and not just transactional. Next slide. All right, I mentioned the financial assessment. So one of the things you want to look at, obviously, is a break-even analysis with your clients. So what does that mean? What's the break-even point? If there's any penalties, prepayment penalties on the loans, and obviously you have closing fees divided by your monthly savings, right? You want to see how long it takes for them to recoup their costs before they really start saving. They might start saving cash flow, but on paper, until they pay back that money that they spent to refinance, they have. So in this example, it says if refinancing costs were $6,000 and closing costs and fees, and it's results in $150 savings, the break-even point would be 40 months, which is the cost of $6,000 divided by the savings is 40 months. So really, that kind of the golden rule. And I don't know, people always say that, and it is the golden rule, but I'm not sure if it is or not anymore, but it was a 5-year payout period on breaking even. So here we've got 48 months, so it falls within that. If they plan on keeping their mortgage beyond that period, obviously it's financially beneficial if they're going to sell their house and they're not really going to save by recouping that cost, and it doesn't really make sense to refinance. So, like I said, if they're going to move or whatever. So, the cost might be greater than the savings. So again, that's you being a consultant and really analyzing their situation. All right. So, one of the tools we offer, which is nice and, very aesthetically pleasing to the eye, and we've got a sample to show you right after this slide, but it's our interface for all pricing scenarios. So you could have your customer in front of you. You can put in their actual parameters, show them what their monthly payment and interest rate will be. You can obviously check all the different parameters to get your pricing, whether it's income type, occupancy, purpose, adjust rates. We have these toggles, and we'll show you on the next slide, where you can go send the rate up or down, show them different credits. So it's really a nice feature that you can use instead of just talking to people. Some people learn through hearing, some learn visually, and here's an example right here of it. You can, move these radio buttons. You can also go in where it says, like, for instance, FICO 680. You can go in there and actually change the credit scores there. You don't have to just toggle, but you can go through, run different scenarios for them. And if you hit the share button, you can actually email them different scenarios with different rates. So, on the right side where it says conventional 30/25-year fixed rates, with the FICO and the LTV, those are the toggles or the up down arrows I'm talking about, where you can adjust the rate, show them their different payments, different lender credits or discount points, et cetera, et cetera. So really a neat feature that we offer. And then last but not least, if you've got a tough scenario on a refinance, you're not sure how to handle it, maybe it's a tricky situation, we've got a scenario desk and we respond in 30 minutes. You can always submit to the scenario desk. We have, videos on our website about how to do that. We have a link. I mean, it's not complicated, and you will get a response in 30 minutes. So those tricky scenarios, we'd love to have a shot at all your deals. No deal's too difficult for us to try and at least get in the game. We just want to have an opportunity to try and help you and help your customers. All right, that's it for my part of the presentation. I'm going to hand it off to our senior conventional underwriter, Brennen Moloney, who's a very experienced underwriter, and he's going to run through some different loan scenarios for you.
All right. Thank you so much, Andrew, and Bridget as well. Thank you for explaining the different programs. And as you mentioned, they might not be niche, but just thinking historically about Refi Possible, ReFiNow, these are relatively newer programs that came out in mid to late 2021. So for a lot of us, it's going to be our first time soon here actually having an opportunity to use these and actually having an opportunity to take advantage of them. This scenario here is a really good example, right? Think about how often you hear the borrowers say, oh yeah, I tried to do something, but there's nothing you can do for me, right? And here at A&D, we say, hey, it's the power of yes. And so the more knowledge you have about these programs, the more tools you have in your tool belt, the more deals that you're going to be able to unlock, right? You figure there might be some loan officers who, okay, I just got my regular Fannie Mae, my regular Freddie Mac, I just got my regular FHA. They might not be taking the time that you guys are taking to educate yourselves and learn more about these different programs. And that's going to help you unlock those deals, right? So when that first wave comes in, you want to be the person who can actually go ahead and find a way to make it make sense. So this example I have here is a bit of an interesting one, right? So we have borrowers, she's a school teacher under the area median income, so she's within that limit. Her husband is, also good job, maybe a engineer, whatever. And so they were able to get approved for the house together. Now the issue is that his FICO not the best, right? Maybe he's got a lot of auto loans, maybe he's missing some payments on this, that, and the other. Um, if we were to keep him on the loan, the deal wouldn't be super attractive because his FICO's a little bit low. So with Refi Now, generally speaking, they do not let you change borrowers. However, if you go to their fact sheet, they do have a carve out where just so long as the borrower provides bank statements. Let's say the mortgage is coming out of the wife's account for 12 months with no lates. We should be good to actually go ahead and remove that borrower from the loan, right? So where one loan officer might say, oh, you're in the best spot, there's nothing we can do for you, you can be the one that says, yeah, we can actually go ahead, take advantage of Refi Now. They want to be able to help borrowers out. That's why they invented this program. And you can go ahead and get them at 58% DTI. Definitely stretch the benefits on this, right? Let's say they're a little bit behind on bills. Maybe they cannot get as much incidental cash out that they would get with the regular rate and term refinance, but they get to skip a mortgage payment and maybe they got $3,000 held in like escrow account, right? That money was sitting there. They can actually get potentially an escrow refund check at closing, and what does that do, right? Well, now that's going to help them catch up on bills, right? You miss 1 month's mortgage payment, that could be a few $1,000s there, a few $1,000s in an escrow refund check, maybe clean up some credit cards, stuff like that. So just keep that in mind as far as benefits to sell. Because if the interest rate savings is, 1% or 2, combine that with those other elements, it's a really attractive deal combined with the credit you get for the appraisal and stuff like that. So um, things to think about too. Also, in this example, the borrower purchased with like 3% down back in 2022. Home values have gone up a lot. It could be feasible that they could be sitting at 80% LTV or less now, if they came into the closing table a couple of years ago with, 5%, 10% down. So either reduction of private mortgage insurance or removal of private mortgage insurance, those are going to be huge benefits, especially if they qualified with that first mortgage with a lower FICO score. Typically, that mortgage insurance payment is pretty high when you got a conventional loan at 680 FICO, 700 FICO, and a small down payment. So, this really gets you the opportunity to have a home run of a deal. Um, Now we did have a question from Michael Allen in the chat. The ReFiNow would then be used in divorce scenario for removal of obligation of spouse. My caveat is that it is possible if there is no equity buyout, and because if there's equity buyout, right, um, it gets a little finicky there, right? Might have to research the guidelines a little bit, but if there is no equity buyout and the remaining borrower meets that payment history coming from their account with 12 months, you're going to be good to go. Now, with that said, they have a carve out in their guidelines as well. If there is a death of a borrower, they will permit that as well. So divorce buyout gets a little finicky, a little tricky.
Yeah,
Um,
hey, Brennan, if I could just
mhm.
add, on a divorce buyout too, unless they, really needed to go refi now, maybe their DTI was, higher than a standard Fannie refi. You can do the equity buyout under a rate and term. And what's great is they don't consider it a cash out. They consider it a limited cash out, but you're paying off your spouse. But there's no cash out LLPA, so you get a better rate ultimately. So refi now, maybe not, but under standard, Fannie refinance program, like I said, I just want to reiterate that they don't consider it a cash out. And so there's no LLPAs and you get a better rate ultimately.
Yep. Thank you so much for that, Andrew. So, yeah, lots of different options there. And then earlier too, when Bridget was talking about, what's your favorite type of refinance? I was originating back in 2019 and then I flipped over to operations. So, I just wish, right, if I had these programs, I know that I would be using them, right? Maybe not all the time, but there's going to be time. So take the time to understand your borrower, lead with the benefits, and I think that this could be a good program. So if we go now to the next slide, just want to talk about scenarios where maybe FHA Streamline could be a little bit more appropriate, right? So the borrower, we love if somebody has an FHA loan and their FICO has gone up. We love that, right? If we get an opportunity to put them into conventional. Now, with that said, that's not always the case, right? And a lot of times borrowers will stress out about, oh, well, I want to get rid of this mortgage insurance payment and this and that. That's when I think it's important to get really quick with your mortgage calculator to put that mortgage insurance payment into the payment and then quote them the effective interest rate. So you can say, hey, if I get you conventional, maybe you get this interest rate, or we don't have to deal with an appraisal. We don't have to deal with income. We don't have to deal with all this stuff. There might be the UFMIP refund, the upfront mortgage insurance premium, right? That fee that they pay up front on an FHA. They might be able to get some of that UFMIP refunded if it was in the most recent 3 years. And you can apply this, reduce the closing costs. Nobody has to come out to the house. Super easy, clean, painless deal to get pushed through. And especially if the effective interest rate is lower, because again, maybe they don't have the best FICO position. Um, Great time for a streamline, right? So low cost, easy to push through. And just keep in mind your loan amount's going to be capped based upon the previous FHA loan. And ultimately, it's one of those things where if it's not a good fit for conventional, why are we going to try and turn them into a conventional borrower? Keep in mind, unlike the last scenario where we removed a borrower from the loan, um, in this one, we're typically going to want to keep the same borrowers on the loan because that has it be a non-credit qualifying. You can do what's referred to as a credit qualifying FHA streamline. With that said, those deals are just a little bit less attractive and a little bit more documentations required to get those pushed through. So ultimately, you guys are the ones out there selling every day. I'm just an underwriter here. I'm a little rusty with the sales, but we want to try and provide as much value to you as possible. So super grateful for you guys taking the time to attend the webinar. I'm going to go ahead and pass it back over to Bridget, I think, to close us out.
Thanks so much, Brennan. I appreciate that. And Oh, you said FHA Streamlines and it was music to my ears. I had some 2012, 2013 flashbacks and
No.
ooh, what a time. What a time to be alive. All right, so looks like my internet's lagging just a second here. We'll move to the next slide. Okay, so we're gonna go on to our Q&A section and it looks like, oh wow, we have quite a few questions in here. Give me just a minute. So the first one that we have, I will answer, and it says, what is the cost to recast, and are there limits to the frequency? Brennan, did you want to take that one?
Yep.
Actually, I can take that unless,
Oh yeah,
well,
go
go
ahead.
ahead, Brennan. If you know the answer, I don't know if you know. Go ahead.
Yeah, no cost, no limit. So I don't got to worry about that.
Yeah, I mean, a lot of servicers do have a limit. Actually, I think there is a small cost, Brennan, on it. But it is unlimited with us. Some lenders have, only let you do it once, but with us, it's unlimited, which is nice.
I love that. And yeah, you know what, Andrew, we did check with Satish, our leader of servicing, that it is now no cost with A&D. So
Oh,
we
okay. Well, I stand corrected. Good to know.
big wins, big wins. We love it. Saving money. All right, awesome. And then if anyone has any other questions, just go ahead and pop them into the Q&A box. We would love to answer any questions that you do have here. And I see a couple notes in the chat. I'm just trying to catch up here. Okay. All right, and then, oh yes, our conventional promo. Love this for us guys. So we are doing a conventional promo with some additional savings. And the first part of that promo is that we're doing a 0.25 pricing reduction, so off costs on all transaction types for conventional loans. And then we're going to extend some of the love to our conventional high balance loans as well. And we're going to give them an eighth or 0.125. And this offer is valid beginning November 18th, so starting in just 3 days. And that will take us all the way through December 18th. So love to give you guys the savings. Hopefully it makes a big difference for you and your clients. And we do have a couple more questions here. Just let me catch up and read them. So give me just a moment. I'll read this one in the chat and we'll see if anyone has an answer for us. Our marketing team might be able to assist with it. But Ronnie said, I just played around with the share feature of Quick Pricer and I have a few questions. The PDF downloads automatically upon opening the PDF. It shows at the bottom a phone number and an email address for info@admortgage.com. How can our information be updated and be included in this scenario? So my marketing team, if you're listening and can give me some quick advice on that, I would really appreciate it. If not, Ronnie, we will message you after the webinar and address your question directly. Or guys, does anyone else have an answer for me? Hopefully Eliona does.
Yeah, hi team, hi everyone. So Ronnie, thank you so much for this question. It's a really great point. We definitely gonna address this to our design team. And I believe we can definitely do something with this because as you may know, we have our amazing tool, A&D Studio, which allows you to customize all the flyers. And I believe we can do the same with the scenarios as well. So thank you for that.
Thank you, Eliana. Every time I hear her voice, I get excited. You guys, she is our marketing monster. I don't know how she does everything she does, but she's incredible. So glad she got to come on and answer that question. And then, guys, I see Fernando, you submitted one in the chat, and Devin, you too. I'll try to address them here. Guys, I have a question regarding products for vacant land. Andrew or Brennan, is there anything that comes to mind when we discuss products for vacant land?
What's the actual question about vacant land?
He said, is there any products for vacant land?
No, we do not lend on vacant land, unfortunately. But
Thank you for that one. And then it looks like we have another one here about the recasting, if it's only Fannie or Freddie that can be recast. Do
my
you guys?
understanding is that so can our non-QM product. Anything that we service can be recast. I mean, we need to confirm that, but I'm about 99.9% sure, but I always want to double check. But as far as I know, yes.
Okay, I love it. And then, oh, we got one more. There's a question in here about whether or not we have any down payment assistance products.
We've been looking at those. We're not offering any of those right now. We will allow loans that maybe they come from we don't offer them per se, but there's a lot of state and county programs. We don't do bond programs, but the state and county down payment assistance in combination with the first mortgage that we do, we will accept, with a combined loan to value. So we accept them. We don't actually have our own or offer them, but we do accept them.
Thank you for that. I really appreciate that. And then Brennan, I saw you put some good information in the chat for us. Did you want to address any of that verbally?
Yep. So I saw there's some questions about the recast. It is not an option for your FHA, VA, or USDA. So just want to keep that in mind. And then it just contains some of the terms and conditions for a recast. Typically to recast, pretty rare, right? Maybe you acquire a lump sum of money through inheritance or else. So just one of those things, right? And in a falling interest rate environment, maybe it makes sense, maybe it doesn't. So just keep that in mind when you're chatting with borrowers about it. A lot of times once you start to bring up recast, it's a nice service, but sometimes the borrower's eyes might glaze over. So make sure you're only bringing it up if it's actually a viable option.
Come on, lump sums. We need those. I love it. Okay, and thank you so much for that, Brennan. Any other questions you would like us to address? We're happy to go through it with y'all. We love these questions and the interaction. It makes us so happy.
Yeah, by the way, this pricing special starts Monday, the 18th. So FYI,
Can't wait.
got a full month to take advantage of it.
Yes, and it's perfect time right around the holiday season. We know how sometimes it can drop off a bit. So hopefully this gets everyone taking action. I love it. All right, very good. So moving right along here, just some friendly reminders. We are your partner for growth. So we have our streamlined loan process, providing brokers with industry-leading turn times, ensuring that you're always ahead of the competition. We have a wonderful can-do attitude and expertise that our account executives bring to the table every single day to every situation, and always ensuring that you're able to get the best solution for your borrowers. So please call us with every question you have. We love to be there for you. And of course, we have loan solutions that are growing. So our suite of loan products are always growing and changing to meet the needs of borrowers and brokers so that you always have a product that fits your unique needs. And I just want to touch on, we love hearing the feedback and what it is that you guys want. Even that comment about, down payment assistance, we really listen to all of that stuff. So continue to send in, your thoughts, suggestions, ideas. We truly love that stuff. And then last but certainly not least here, we have our flexible underwriting. So Brennan and his entire underwriting team do a really wonderful job of providing us solutions to out of the ordinary borrowers and helping them get the financing that they need when others have said no. So that truly is the power of yes and how we help you grow your business. We hope you guys have been able to see that in your time working with us, or we'll see it moving forward. All right, without further ado, I want to go over our upcoming webinars. So in case you haven't heard, we launched our brand new industry leading leader CRM. We're very, very excited for this. So we will have a webinar on December 3rd at 1 p.m. Eastern Standard Time to go over how to become an industry leader with our new CRM. And then we have a broker orientation. So if you haven't gone through it yet and you need to, or if you have friends that are brokers and are going to go through an orientation with us, the
Hey,
next
Bridget, can I just interject something on this broker orientation? If
Yeah.
you're a current customer and, you've been through the orientation, you know how our systems work, that's great. But we've released a lot of neat features lately, like this CRM that's coming out, our loyalty program. There's a lot of new things that have come out, so you might want to, check it out again if you can.
I love that. I'm so glad you brought that up, Andrew. We're working hard to make a ton of improvements, and so you kind of have to check in periodically to see all the new updates. So it never hurts to join it again, even if you've been with us for a while. Thank you so much for mentioning that. And then we also have one more webinar on the 17th of December for our loyalty program. So if you have not been through that workshop, you need to come. I'll be there for that one. So please come visit me, interact with me, and we'll show you how to get into the loyalty program and how to start earning points and taking advantage of those. So thank you guys so much. If you need to become a partner, here's the QR code to do so. Go ahead and scan this. And if you're already a partner, you can scan it and send it to your broker friends. We would love everyone to be partnered with us. And I am just so excited to finally say we have 7,000 partners. So aside from that, you guys will receive a survey. Please give us great reviews. That decides whether or not I get to keep visiting you and doing these webinars, and I love them. So please give us good reviews. Andrew, Brennan, do you have any closing comments before we say goodbye to the group?
No, I'm good. Thank you. Thanks for attending, everyone.
Thank you guys so much. We'll see you next time.
Okay, bye. Thanks.
Thanks, guys.
Bye.